Oh
Here
my
we
God.
are.
Oh, jeez. I'm sorry.
No, that's fine. That's fine. Well, welcome to this show. Um,
Hello,
thank you,
everybody.
Ralphie. I would like to introduce you. I don't know how to call you as a friend, as a mentor, as a dad. I don't know what to say. You tell me.
Just call me your friend. That's
You
all.
call me a friend. For now, we're gonna call you a friend. You're more than a friend for me. You know, I've been telling you this for years. So
Okay,
one thing, I'm gonna say something in español, okay?
please.
Muchachos, los que se estén conectando, vamos a tratar de escribir las preguntas para Ralph abajo y a medida que la conversación vaya, yo las voy leyendo y vamos a ver cómo trabajamos esto, ¿no? Okay, Ralphie. So as you can see, I'm told those are the people who start connecting. We passed 100 people, so that number can be, go up or go down. It depends on the connection. It depends how interesting our conversation is.
Yes.
So if it's really
Good.
interesting, people will
Yeah.
connect more. That's what we want. Okay.
Okay. Yes.
So okay, let's start with we I want you, you broad analysis. I want you to know what's going on. Let's do a little intermarket analysis. And let's start with the S&P 500. What are you thinking? What do you think?
Okay.
I would like
All right.
your insight of that.
All right. The date to remember is March 23rd. That's about 5 weeks ago. We had a horrific decline going into that March 23rd low. And analysts like myself like to look at emotion, psychology. And there are many ways of us measuring fear. And the common one, the one that everybody looks at, is the VIX index, VIX. That's the CBOE options on the S&P 500. That hit a very high level, a level that normally attends a market bottom. So that was very positive. I also look at other sentiment indicators, and they also hit very important levels. Uh, Another one is the put call ratio, puts and calls. When you
Mm-hmm.
get an abnormal amount of puts, which we did, again, March 23rd, that also suggested that there was an enormous amount of investor fear. I like to look at a survey. It's called the AAII survey. That
Mm-hmm.
means
Mm-hmm.
the American Association of Individual Investors. Those are regular public investors. And they survey them once a week, and over 50% of them were negative at that period of time. So when I put all this stuff together, Juan, I usually at least lean towards that maybe we have made a bottom. And since then, the market has rallied, consolidated very nicely, and I think for sure that the market has made the final bottom.
Okay. 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 So you see the same thing on the Dow Jones, on all the
Oh,
indexes too?
absolutely. Everything. Yes. The entire market. In fact, I'm looking at other markets around the world, and they seem to be mirroring the same thing in the United States. So I think globally, all that fear and justifiable fear with the virus, the coronavirus, I think it manifests itself in the markets around the world. And I think the worst of the fear is behind us.
Okay. Okay. That's good. What do you think about oil? What's going on with oil right now? What do you think all the
Well,
oversupply,
yes.
that's the contract, the past contract hit negative territory. What do you think it might
Yeah.
see another
Yeah.
territory?
I think if the most recent activity in oil, especially today, suggests that maybe some investors are starting to come back in. Very much like the stock market, it's overdone on the downside. I'm not saying you have to be a very aggressive buyer, but if you are inclined Yes, but this is more short term, and there will be a lot of volatility in that market due to, as you said, the supply around the world. There's so much oil, no one's using it, no planes, no cars. But that's again, that's temporary. That's for the current position right now. But I
Mm-hmm.
think looking out 6 months to a year from now, I think oil will be in much better shape.
Okay, okay. So in the same context, so I know you're bullish on gold. We're talk about that the solid base that the gold made, and how many years it made that base?
Last 5 years, yeah, since I'd say it's 2013 to 18, 19. We've had, in 2011 it was at 1900, and it came all the way down to 1,000. And for 5 years, it stayed around 1,000, 11, 1,200. And that consolidation for me as a technical analyst is very, very encouraging. In fact, gold was starting to move up before the coronavirus. And then with all of the panic and the virus, gold spiked up to around $1,700 recently. So I think with people feeling a little less anxious about the virus, gold might come down a little bit, but I think that's a buying opportunity if you're longer term.
Okay, okay. So I think at the Goldman Sachs, their forecast is 3,000. Do you think is that possible?
I don't
Based,
know about 3,000, but I could see an all-time new high above 1,900. Yes, yes, I could see
okay,
that.
okay. So in the same context, so the dollar is another big topic right now because the correlation between the commodities and the dollar is
Yeah,
that's one of the themes that what are your thoughts on that?
yeah. I don't know if the dollar has peaked. I appreciate the relationship that you're bringing gold and the dollar, but there are periods of time when you can have both going up. So
Hmm. Hmm.
um, I'm not so negative on the dollar just yet.
Okay,
So if I had the dollar, I'd hold it. Yes.
okay, okay. So do you think that there's like a famous, I'm before we move to the next topic, there's another one of the phrases is very common that don't fight the Fed.
Oh,
So
absolutely.
what do you think about that?
Oh, absolutely. I'm writing a book now, and a part of my research is talking about the history of the Federal Reserve. The Federal Reserve came out in 1913, and the crash in 1929 was 16 years later. The
Hmm.
Fed didn't know what it was doing. They didn't support the
Okay.
economy. We learned a big lesson, and the Fed did its thing in 2007, 8, and 9 when we had that other correction.
Hmm.
And right now, the Fed is just flooding the system with money. The Fed is doing what they have to do. In
Okay.
fact, Bernanke came out the other day. He says, "Go big," and they are.
Yeah, all
No,
right.
I think that definitely the Fed, and that's one of the reasons why the market is being supported. That the money is there.
Okay. So when you're gonna compare these crash, what would you compare with similar crashes in the past? What do you think would be the more similar case?
Well, I give you history again. The crash, 1929 crash.
Hmm.
The Dow lost 89%. The second worst Dow decline in history was the one that we went through not too many years ago, 2007, 8, 9. The Dow lost 54%. That was the second worst decline in history.
Hmm.
And the big difference is that the Federal Reserve was very supportive in 2008 and 9 to help the market. If not, we'd had a global depression, but we avoided that. So I would compare current market to that. But I'd also, because I lived through the 87 crash when we had in one day the Dow lost 22%. That was very, very scary. And a lot of that is we've maxed the indicators and the sentiment statistics that I just talked about. So those are the two, three comparisons I would make.
So in the same context, is it possible that we'll retest the lows again, or do you see that any?
I don't think so. I think the March 23rd low Sure, we'll get corrections and all. It's possible, but Juan, for the last couple of weeks, I've been saying no. The low is in. You don't have to test it. I'll stick with that.
Okay. Okay.
I'll stick with that.
Okay. Okay. Now let's move to the next topic.
Sure.
I know you want to share with everyone, you know, as you see, more than 100 people are connected. They want to know more about the CMT program. Why you think people should take the test? And I don't want to say it's just taking the test. It's experience, the learning experience, the whole journey. I want you to tell everyone who is connecting right now more about the CMT.
Okay. To begin, in 1967, I didn't say 1867, 1967, I came into business, okay, at 53 years ago. And there were only a few technicians. I can't give you a number, but they were a minority in Wall Street, technicians. And as years went by, people like myself started teaching technical analysis. I taught the street, literally, at the New York Institute of Finance every Monday night for many, many years. And a lot of people started to use technical analysis. And now with the technology of graphics being on the telephone, you get charts all over the place. So more and more people are using it, and rightly so. Myself and several of my very dear friends, we started the Market Technicians Association, which is now called the Charter Market Technicians Association, CMT Association. And the date is Friday, December 17, 2004, when a handful of us went in front of the Securities Exchange Commission, and we fought for the validity of technical analysis. And the Securities Exchange Commission recognized us on March 2005. The CMT exam now is equal to, in the eyes of the government, of the securities, it's equal to the CFA. Two different bodies of knowledge, but equally important. That's extremely, extremely important. Now that exam now has been elevated to a level where it has obviously enormous credibility. I say you need it because where do you learn technical analysis today? And we have many more people doing technical analysis. You would think that Ralph Acampora would be very happy seeing all these talking heads on television talking about all these numbers.
Yes.
But I don't know where they got educated. And the only place really where you learn the subject is with the CMT exam. They will force you to read the right books. They will force you to study what is definitely being done today. Especially now, I get very emotional about this because technology and the algorithmic trades, that's all momentum. That's technical analysis. And it's not taught in universities. But at the CMT Association, level 1, you're going to read all the basic books on the subject. You have to do that. And level 2, you get a little bit more involved in the depth of it. And then level 3, of course, is applying the subject. I think, thank God for the CMT, where we can, if you get the degree, if you study and get the degree, you're on a level with the professionals.
And how many sponsors do you need for level 3?
One, I think.
I think there are 3.
Oh, 3?
I think it's 3. Yeah.
Yeah.
I don't know. I think it right now. Andres and Alberto are watching this. I know you sponsored them, Venezuelan, so you can share your number when we went to Caracas.
Oh, absolutely. It was wonderful. And the people are great. And the enthusiasm for technical analysis, I am very, very impressed. And I will sponsor anybody that takes the exam. You can count me in as a sponsor.
That's good. That's good. Okay. So, you know, it's really interesting. Look at what I have here. This is a surprise for you. Look at what I have here. This is your book. One of the things that really I'm really fascinating is the 9 combinations of the actual price and relative strength activity that you developed. So can you share more about that?
Oh, yeah, my relative strength. It's in that book.
Yes, it is.
But
Yep.
that book is out of print, but that's everybody talks about relative strength, and it's very
Yes.
important. You
Yes.
take, let's say, your stock, let's say Facebook versus the S&P 500. If that relative strength line goes up, that's is that means it's outperforming the S&P 500. If the if that relative strength line is flat, that means it's even with the S&P 500, or obviously if it's going down, it's underperforming the S&P 500. And that's the way people look at it. But I look at it a little differently. I look at not only the direction of that line, but I look at the underlying S&P. What's it doing? In other words, I'll give you, for instance, if the stock is going up, and if relative is going up and the stock is going up in price, you have the best of both worlds. You're making money because your stock is going up and you're beating the market. That's the best thing you can. You can have the stock outperforming you can have the stock going up in price, but it's even with the S&P 500. That's a second way of looking at it. You can have the stock going up in price, but it's the relative is underperforming the market. There are actually 9 comparisons of the relative strength line with the actual price of the stock. And that's in the book, and very few people look at it that way. And I think,
There's another thing that I want to share with you from your book. There's a phrase that you put in the conclusion to say, markets are driven by human desires from profit and growth, and by emotions ranging from hope to fear.
yes.
What do you imply by that?
Oh, yeah. Well, the emotions of let's say the emotions of a bull market. You can't have a bull market until you have a decline. Okay, let's say this current
Yes.
market, we had a major
Yes.
decline. I talked about fear with the VIX index and the put-call
Mm-hmm.
ratios and things like
Mm-hmm.
that. That fear is the way bull markets start. They start when everybody is upset. In fact, Warren Buffett, the famous investor, says, buy when they are crying, sell when they are greedy. And people have been crying. They've been very, very sad. Okay. Part one of a bull market is that coming out of that fear, that level of greed, fear, first leg up of a bull market is usually led by quality. Blue chips usually lead.
Mm-hmm. Mm-hmm.
Second leg of a bull market is that when secondary stocks, for example, Procter and Gamble is a blue chip. It's everybody knows what they make. They're in the Dow Jones Industrial Average. Colgate is also in the same business, but it's not as big as Procter and Gamble. But that's a good company. That's a secondary. So you go from blue chips to secondaries, and then the last phase of a bull market is that you go into greed. That's when the speculative stocks run. So you go from fear to greed, and the 3 different kinds of stocks: blue chips, secondaries, and junk. That's how it is.
Yeah. You know, Jay
Yep.
Wood, Jay is watching us too. So you're gonna say
Oh,
hi to
wonderful.
Jay. I think Jay is around too, one of the people.
Hi, Jay. How you doing, buddy?
So I have Jay a couple of weeks ago. Now I want you to please tell everyone about your book. What are you working on? The new book
Okay.
that is coming out.
Yeah. Yes. Well, if you want, you go on YouTube and dial up 50 years on Wall Street, 50 years Wall Street, and you'll see a 15-minute interview of me walking around my barn on the farm. Okay. And what I'm doing, it's done by Stock Charts. They interviewed me, and we walked through the history. And everybody that I walk around, I painted the entire history of the stock market, starting in 1871 with the thing called the Cowles Index. That was the most perfect index they could have in those days. That was actually made in 1923. Cowles created this thing. And that, in fact, the Cowles Index becomes the S&P 500 in 1957. It's kind of a cute story. But I started with the Cowles Index, and I picked up the Dow Jones Industrial Average in 1896 when it came out first, and I completed the whole wall all the way around the barn. It's about 165 feet of charts, monthly charts. And in it, I put the pictures, I put the presidents of the United States. I put in historic events, these little plastic labels I had made up. I have these red lines that go across the chart that suggest where there were recessions or depressions or panics. And I had a bunch of college students come out, and the dean of the school that I teach at, St. Thomas University in St. Paul, Minnesota. It's a wonderful school. And the dean came out and she looked at it and she said, you have to write a book, and I want to do a video of it so you can walk people and the students around history. And that's the theme of the book. And I've been working on it now for a good 6, 7, 8 months. It's fascinating. It's going to be wonderful. Of course, it's a history of my country, but you're going to learn a lot. You're going to learn. I found out talking to students that they don't really have a sense of economic or fundamental history. So I'm going to bring all that stuff up. I'm going to talk about balance sheets and income statements, when they started to become very popular and came into, I mentioned before, the Federal Reserve came out in 1913. But up to that point, there was a recession almost every 2, 3 years in the United States because the government didn't have the format to adhere to it. All of this is going to be in the book, and it's just going to be phenomenal. And I'll be talking about a pandemic. Obviously, the chapter I'm going to do on, it's going to be A Planet on Pause, is going to be the title of the chapter. And I'm going to compare this to the Spanish flu in 1917-18. By the way, the Spanish flu didn't start in Spain. The reason why they got that name is that the First World War was going on, and the Germans, the Brits, the French, and the Americans weren't writing about the flu, but Spain was a neutral country, and their newspapers were writing about the flu, and that's where the name came from. They thought the Spanish flu, but it wasn't. It actually came. The flu actually started in France, in the trenches of the war foot. I'm gonna have all this in the book.
Do you have any day when you're gonna release the book?
Oh, it'll take me at least another year to put it all together. Yeah, I'm doing very thorough research. It's
well, take your time. No rush. No rush.
Oh yeah. And
so
then I want to do a video of it too.
Oh yeah. How many recessions have you seen?
What?
How many recessions have you seen?
Oh, have I seen?
Yes. How many have you experienced?
Oh, well,
economic recession, particularly.
Yeah. Since 1967, there have been 7 recessions. It's actually 7 recessions.
And this one, you think, in that based on your experience, is not the worst that you ever seen, or what do you think? Yeah, the contraction we're having right now.
Oh well, the contraction is unheard of. I mean, and here you're closing the government down and all of that sort of stuff. I'm not an economist, but I'm sure we're going to have repercussions, and it's going to go on for months, if not a couple of years. Now, having said that, the stock market is a different ballgame. The stock market anticipating coming out of this thing. So I'm bullish on the stock market, and I have been. But
so
the economy?
Now, you know, the famous quote, they say, market discounts everything. What do you think in this term, what happened?
Well,
how can
the market looks ahead to anticipate good news or bad news, and it usually has a vision. It usually looks out 3 to 6 months. At least that's what we've been saying in Wall Street, and that's true. That's true. That's why that March 23rd low. When I started talking positively about it, I kept saying to everyone, when I was a young analyst, my old boss came up to me, this old gentleman, who was about 70 years old. He said, Ralph, when you're writing a market letter, close your eyes and try to think of what the headlines are going to be in the Wall Street Journal 6 months from today. I'll never forget that. That's the discounting. That's what Wall Street does. It looks ahead. It looks.
Ralphie, we have more than 30 questions.
Oh wow!
So let's see if I'm gonna pick just 2 or 3 and see if you can respond it. Okay.
Okay.
Okay, so let's see. Let's pick this one. So you use the MACD indicator. How you
Yes,
use
I
it?
do.
I think it's what the person is saying.
Yeah, I use the the ones that are I feel comfortable with using RSI and MACD. Yes, I
Okay,
use them regularly. I use other indicators, but these I like. Yes,
okay,
good question.
okay, okay. So let's see.
But I like the MACD more on a weekly basis because daily you get a lot of signals. But if you're a short-term trader, then you know that's a different story.
Okay, another question. What do you think about cryptocurrencies?
Cryptos.
Yes.
Um,
I know you're skeptical, but
that, yeah,
what do you
I'm
think?
skeptical. I'm a skeptical guy. But it's becoming more and more popular, and you can follow them technically. You know, so fine if you're so inclined. Obviously, it needs some kind of government acceptance, and until that happens, trade them.
Okay, okay. Uh, my wife say hi to you.
Ah, great. Sweet.
Okay, let's see. What do I think about? Let's see. Okay, so you can pick three books that you can recommend to anyone. What would be those books?
Well, if you've never read a technical analysis, um, I think you'd have to read the textbook put out by Charles Kirkpatrick and Julie Dahlquist. It's called Technical Analysis. That to me would be a reading. Or and John Murphy has written many very fine books on technical analysis. The third one would be Steve Nissen's book on candlesticks. I would definitely read that one also. Those are three books on the subject I would read.
Mm. You know, I recently had Ivan Sherman. He's from Argentina. I think you met him
Yep.
on the New York seminar, the symposium. Sorry. And he was telling me about he's gonna invite you and John Bolligers to go to Argentina to
Wow.
in the future. I don't know when or anytime soon, but that's gonna be a project that I will tell you more about later, but.
Okay.
And so you
Wow.
can see we have more than see how many people we were close to 100 people and more people connect, but I didn't track how many. So let me say something in Spanish. 1 second. Si
Sure.
tienen alguna pregunta aquí para Ralph también. Jay say hi. You see Jay Woods is saying hi. You see hey Jay?
I do.
um,
Send him an email today. I hope he got it.
uh, So you see, so you can use MACD and RSI for day trading. That's one of the questions here.
Um, I don't day trade, so yeah, I know people that do. Yes, yes, but you got to be very quick. So I mentioned before that I use MACD and RSI basically on a weekly basis and monthly too, but because I have been always intermediate long term. That's when I've worked for all these major brokerage firms. My job was to write a long term letter for investing letter, and I've
Hmm.
been did that way all my life. Yep.
So what is your analysis on all these algorithmic trading or what's going on that's like taking place in
Well,
the market right now?
well, well. I got to respect what's going on. I mean, I don't understand a lot of it. I'd be very honest with you. I'm not a mathematician. I think you have to be you got to be into heavy duty math to understand the actual algos. But a lot of that is on some of the indicators that we technicians use. They're part of these algorithmic trade programs. So CMT, study for it because you'll get into that. You'll get more into that. So yes, definitely.
Okay. Okay. That's um the last I think the last topic that I'm gonna cover with you. It is for some people I know you like to analyze the Dow Jones theory a lot on your charts. So what are you seeing on the Dow theory right now?
The Dow Theory? Oh,
Yes.
well, Dow Theory, of course, when everything collapsed. But by the way, the Dow Theory is two averages, the Dow Industrials and the Dow
Mm-hmm.
Transportation average. One of the products, industrials, and the other one ships the products, the transportation. That's Charlie Dow in his simplicity was a bloody genius because you got to remember this is the late 1800s. There were no economists, and he wanted to write about. He was the editor of the Wall Street Journal. He wanted to write about the economy, so he created this. And people laugh at the Dow theory. It's irrelevant today. No one uses railroads, and well, no, but they use planes. So I still look at it. Right now, Dow Theory, what to get the resumption of the bull market, we would need not only the industrial average, but also the transportation to make new all-time highs. I don't see that happening right away. So, in fact, you were talking about before about
Mm-hmm.
maybe testing the lows. I don't know
Yes.
if we test the lows, but if we have another correction, and they don't make new lows, that'll be very encouraging for Dow Theory.
Okay.
So
Okay.
I'm looking for a correction in terms of Dow Theory that hold and
Mm-hmm.
that March 23rd low again for Dow Theory is very, very important. Those averages have to hold, at least one of them. One can break it, but the other one has to hold.
Okay. Okay. So Ralph, thank you for your time. Have
Thank you for
you
inviting
eaten
me.
arepas recently? Remember the arepas, the Venezuelan corn
Oh
flour?
yeah, yeah, yeah. Well,
Remember
you got to
those?
send me some. Got to send me some.
And the empanadas. Remember
Oh,
you
I
tried the
love.
empanadas too?
Yes, of
Empanadas,
course.
arepa. Which one is your favorite? Empanadas or
Empanadas.
arepas?
Empanadas. Yes.
Empanadas.
Yes. Yeah. The
And
best.
the arepas too. I think you try. We call Reina Pepiada. That's the one that